It's Friday and we've come to the end of another trading week. Joining me now for the weekly wrap-up to discuss data releases and news events which has been playing on market sentiment this week is Dr. Holger Schmieding, Chief Economist at Berenberg Bank in London. Holger, thank you very much for joining me. Now, it seems like today could be a fairly quiet end to a fairly quiet trading week. But for you, what were the highlights of this week?
The highlight of this week was actually that there was no highlight, that for once nothing dramatic happened in the Eurozone saga. And so we are seeing a bit of a return to normality. That, in my view, is clearly worth pointing out.
Well, obviously there is still a lot of attention on Europe and what these struggling debt-ridden countries might do next to stoke volatility in the markets. Spain, for example, raised 4.8 billion euros in a debt auction on Thursday. Yet the pressure is still there for Spain to seek a rescue package. Now, the market seems to have let Spain off the hook for now, but do you think it's just a matter of time before something spooks the market and bond yields surge dramatically again? Also, do you think this is the only way Spain will actually ask for a bailout?
I hope that yields will not surge dramatically again, but yes, there will likely be upsets on the road, and it is more likely than not that some irritation in bond markets will eventually bring Spain to ask for a bailout and thus to ask for ECB support.
But when could this happen? This is, of course, speculation, but in your opinion?
There's a good chance that in early October, Spain may formally ask for help. We have a number of important meetings in the Eurozone in October, the finance ministers on the 8th of October, and then an EU summit in the middle of the month. In the run-up to that, it's quite possible that Spain asks its European partners for help to keep its bond yields at a tolerable level for longer.
What about the Eurozone's economic superpower, Germany? Even as the weak Eurozone economy continues to take a toll on the country's exports and the industrial sector, do you think Germany may manage to stave off a recession?
Probably yes, but for that Germany would have to thank Mr. Draghi from the ECB. Leading economic indicators in July were clearly pointing towards a German recession by the end of the year. We had always hoped that the European Central Bank would intervene in time to prevent that recession, and that is exactly what now seems to be unfolding. We have seen for German manufacturing, for instance, the PMI rebound 2 times in a row in August and September. Chances that Germany can avoid recession thanks to the European Central Bank are now pretty good.
The Bank of Japan's move to extend their asset purchase program in the face of a strong yen was the latest in a line of central banks embarking on the policy easing path. But given the aggressive easing by the Fed and the ECB in comparison, while the Bank of Japan's action is viewed as a step in the right direction, do you not think it's slightly insufficient with its limited approach?
The Japanese economy is not doing all that badly. They probably need less stimulus and they need less repair than the Eurozone and the US may do. On top of that, as an open economy, Japan will benefit significantly from any stimulus unfolding in the Eurozone, in the US, and in China. So by and large, I think the Bank of Japan is playing it the right way. They are adding to the stimulus, but they are not going overboard.
Looking at both developed and emerging market economies, which central banks do you think we could get moves from next?
The major central banks in the developed world are now through with it. We should see some stimulus moves in the emerging world, possibly Brazil and China as the major ones next on the list.
What about the commodity market? How are some of the major events of recent weeks affecting assets like gold and also the price of oil?
The chances are that the European economy will improve and that the perceived risk of a euro breakup will recede somewhat. I think that should express itself in a stable to slightly falling price for gold, but in a stable to slightly rising price for oil.
Just to wrap up, Holger, looking ahead to next week quickly, what news events do you think will be keeping investors on their toes, and what do you think will be playing on market sentiment as the weeks go by?
As often, it will be the news flow about the Eurozone crisis that will keep market attention. There will be the continuing discussion whether Spain will request a full bailout. We will likely hear on Thursday some details about the Spanish bank bailout. On top of that, we have some economic data, starting with German for business confidence at the beginning of the week and with U.S. durable goods orders later in the week. Some economic data which will likely show that the current situation is still rocky, but that the outlook is starting to gradually improve.
Thank you very much for your comments, Dr. Holger Schmieding. It was great to have you with us. I'm afraid that's all we have time for this week's weekly wrap-up, but there is plenty to keep you updated and informed today on DukascopyTV, so do stay tuned. For the moment though, goodbye.